Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we had the pleasure of interviewing a good friend of mine, Rick Rule. How you doing?
I'm doing very well, Daryl. As always, the better for being on with you. Thanks for having me back.
Yes, indeed. Let's jump right into it. So you've been calling for oil and gas stocks to rally for a long time. Obviously, I'm assuming that it wasn't on your bingo card that the United States and Iran would be blowing up oil and gas infrastructure that have taken decades to build and impact the lives of billions of people. And so just curious in your thoughts on oil and gas, especially with this current conflict going on.
Well, you'll recall from my earlier interviews that my thesis was that the thing that was going to move oil and gas prices was the deferral of sustaining capital investments. I figured that would happen in 2028, 2029. Then Mr. Trump, I guess, decided to speed things up a little bit. No, you're right. I didn't anticipate what we've seen. And, I think it's tragic. The oil stocks now have, at least for the most part, given me a lot of what I hoped. I'm not a seller of the investment grade oil stocks because I'll locally own them for 5 or 6 years. But if I were a speculator, if I had owned some trading positions, I would definitely be taking profits. Now, that isn't to say that the damage that's been done isn't pretty spectacular. And if this dispute goes on a little longer, it will have short-term implications. In the sense that the world will have used up its floating reserves of oil and gas, and that'll get really, 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 really difficult, particularly in the Far East. But the other thing that's happening is that the offensive targets have moved beyond military targets. The natural gas liquefaction trains at Qatar are ultimately responsible for about 30% of the world's export liquefied natural gas and about 30% of the world's helium. And it will take some time. The Qataris are saying 3 to 5 years before those facilities are up to speed. In retaliation, the Iranian production facilities on Karg Island, which are, by the way, the other side of the Qatari gas field, the Iranian part, also got hit. And if this escalates, it isn't too much to imagine. This is not a prediction, but it's not too much to imagine that the Iranians would begin to focus their fire on Ghawar and some of the other major onshore Saudi oil fields. I hope it doesn't happen. If it does, that will exacerbate an already bad situation, bad in the sense of the short-term damage being done in the Gulf, but also bad in the longer term as a consequence of the fact that this will add more money to the sustaining capital deferrals that need to be caught up on. So this could have longer term implications around oil and gas. I don't know that it will. And for most people, I don't even know how to play it. When you and I were talking about Exxon, Exxon was a $100 stock. It's different talking about a $170 stock than a $100 stock. You're really in the sort of nobody knows sphere now.
Mm-hmm. What type of long-term, so you mentioned 3 to 5 years to kind of repair or fix up whatever's blown up in Qatar. What type of long-term implications does this have because right now, I think Trump tacoed on something and pretty much said that he was negotiating with Iran, and then Iran said they haven't heard anything from classic politician talk, right? And so, just curious, and it seems like the lives of billions of people are being played with when you think of how much energy goes to the Eastern Asian nations and such. And so curious in your thoughts there on those implications.
Well, this is problematic. I think, ironically, the most profound long-term implications are ones that miss most thinkers. I think the big beneficiary of this will be the uranium industry. Uranium is the only fuel on Earth that's dense enough that Taiwan or Korea or Japan could easily store 5 years of energy requirements in a warehouse. The Japanese nuclear power plant construction boom got underway in earnest after the Arab Arab oil embargo in 1973, when the Japanese concluded that in their search for energy independence, that they needed to focus on nuclear. And I think that I think they've relearned that lesson. And my suspicion is that the circumstance that we're seeing in the oil market, the most inescapable conclusion probably is that for nations that rely on Persian Gulf crude, given the inherent political instability in the region, that they're going to increase the pace of nuclear plant approval and nuclear plant construction. Um, Other implications: liquefied natural gas trains outside the Persian Gulf that have been stalled for various reasons. I'm thinking about the North Shelf in Australia. I'm thinking about Mozambique, but also certainly liquefied natural gas plants that likely are being proposed for Guyana. Any source of liquefied natural gas plant outside the Gulf is likely going to get built. This may also have applications in the nitrogenous fertilizer business. About 40% of the world's nitrogen and smaller amount of the nitrogenous fertilizer in the world also comes from the gas fields of the Gulf. So I think that the world will uh, take this lesson and increase the tendency towards geopolitical diversity of supply. Uh, a different question this points out, not just an East versus West question, is whether this conflict in the Gulf develops into a broader Sunni versus Shia dispute, which is to say an intra-Islam dispute. Iranians and to some degree the Eastern Iraqis and disparate Muslim populations throughout the Middle East practice Shia Islam, where the Saudis and most of the Qataris and most of the Emiratis practice Sunni Islam. And there has been a schism between the Sunni and the Shia for 1,000 years, which occasionally breaks out in the local sense. But it would appear that this dispute, if the nations on the west side of the Persian Gulf take the side of Israel and the United States against Iran, I think that this conflict has the ability to destabilize the Middle East even further in an even more divisive way for a longer period of time. I hope that isn't the case, but you always look for the implications in the news, and I try to look for the implications that the popular media, the popular press doesn't focus on.
Yeah.
It's difficult for me, Daryl, sadly, to see any good come out of this at all.
Yeah. Yeah. Agreed. So, what about Russia and China? I mean, there were some articles and information intel that came out that Russia is providing Iran with satellite images of United States bases, which, I mean, we did the same. We gave Ukraine weapons to I guess, defend themselves.
It's going to be interesting for us to. It's going to be interesting for the United States to lecture China about Taiwan, given the circumstance, much as it's difficult for us to lecture the Russians about providing targeting info, given that, as you suggest, we've done exactly the same for the Ukrainians. I believe that the Russians are aware, perhaps unlike us, that they're not strong enough to fight a two-front war. So I wouldn't expect that we would see direct Russian involvement, because I think Russia's exhausted from fighting the war that they're already in. If the Chinese are smart, and I think they are, they'll let us punch ourselves out. They don't need to get involved.
It's the art of fighting without fighting, right?
Despite America's protestations to the contrary, China has never evidenced very much by way of imperialist ambitions. You don't see Chinese bases around the world. You don't see Chinese forward troops in 100 countries. They seem to be much more involved, at least militarily, on their own frontiers, rather than internationally. So I would be surprised if I saw the Chinese add much more than lip service to the circumstance. Certainly, to the extent that the Chinese can ask the Iranians to facilitate the shipment of Iranian oil cargoes going to China, they'll do that. And I suspect the Chinese likely will say to the U.S., if you don't get in our way, we won't get in your way either. But this oil is critical to us. And while we don't approve of what you're doing, I suspect one political quid pro quo could be that the Chinese will not interfere overtly in Iran if the United States doesn't interfere with the transshipment of crude shipments through the Straits of Hormuz to China.
Yeah. Yeah, it's kind of interesting. Just thinking of China's strategy, it reminds me of Bruce Lee's Enter the Dragon when he's on the boat and this guy comes up and tries to challenge him to a fight. And then Bruce Lee's like, I mastered the art of fighting without fighting. And then so he tells the guy to get on the boat and the guy starts rolling off the seat and Bruce Lee just unties the rope and then lets the guy drift off while the main ship is taking off. It seems like that's kind of China's approach, just, sitting back and allowing the United States to be self-destructive in a lot of ways.
Well, I'm not a foreign policy analyst, but I suspect there's a lot to be learned from that point of view.
Yeah, for sure.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
The Strait of Hormuz. Do you think a deal gets struck here? I mean, it seems like Iran is willing to go out guns blazing and such, and so the Strait just seems like it seems like that's a done data in a lot of ways. I'm just curious in your thoughts.
I don't know that the following, which I'm going to discuss with you right now, is true. But I have some very good friends in the Emirates who have told me that the Iranian leadership have no second choice, that they are not universally popular at home. And if they are not able to maintain power, that they're in a lot of trouble. In other words, they have no second choice but to prevail. They've also had, 30 years to dig their way very, very, very deep into Iranian society. I hope, if we're hoping, I would have hoped that this whole circumstance could have been avoided. I hope that Mr. Trump is not rash enough to put boots on the ground in Iran. My suspicion, without ever having been there, just knowing lots of Persian people personally, is that while the Iranian people, or at least a large number of Iranian people, have no love for the Revolutionary Guard and the Iranian government, that they probably would have less love for a foreign invader. And I think it's one thing to take on an air force that's clearly inferior to ours and use technology, Russian technology that's clearly inferior to ours. It's very different, I think, if we put boots on the ground, if we put Marines into Iran. Remember, there's 90 million of them. This is not the same as going into Syria or going into Iraq. And I really, truly, sincerely hope we're not that stupid.
Yeah. Do you think Barron Trump would follow in his dad's footsteps and dodge the draft? Or
well, what I understand that is he's too tall to go in the military. He's too big a target or something like that.
Yeah, it's very interesting. So I think this is an important segue into many people voted for Trump for America First. policies and such. I mean, you still have the affordability issue here, and we're kidnapping the president of Venezuela. I think we're circling around Cuba. That topic keeps coming up. Greenland has come up. Now we have this issue with Iran, and many people are pissed off that we aren't focused on our own infrastructure and jobs and things of that nature, and we're focused on these foreign affairs. And so, curious in your thoughts there.
Well, my thoughts are it's a good thing you're recording for a Canadian channel. This is going to make you real unpopular. Some of your listeners, probably proof positive that you're doing the right thing. As you know, Daryl, I'm not a political commentator. I'm not a Democrat. I'm not a Republican. I guess I'm a libertarian and anarcho-capitalist. To the extent that I had a political comment, I would only say that I believe the government that's most dangerous to me is the one that's closest. I was never particularly afraid of Khamenei or Putin or Xi. I was afraid of Biden. I am afraid of Trump. They're close. And so, my belief is that they're capable of doing harm. Farther to that theme, I guess the correct phrase would be, or slogan would be, regime change begins at home. I regarded Maduro and his predecessor Chavez as particularly loathsome human beings, but I didn't think it was my business to remove them. I think it's the Venezuelans' people's business to remove them. That's done. Mr. Trump didn't have me on a speed dial. He didn't ask me for good reason. And I guess now we have to make the best of a bad situation. You and I discussed Venezuela before, and I said that the markets are acting as though regime change has occurred, which is probably not accurate. We removed the top thug. The other thugs are still in place. Now, it could be that Mr. Trump has made a deal with them. It could be that he says to them, you can rape and pillage and do what you've been doing for the last 25 years, as long as you do it on my behalf. That could be. I don't know. And it would appear that the Cubans have taken note. If we were able to project force all the way across the so-called Gulf of America into Venezuela, it would probably be much easier for us to project force 90 miles, between South Florida and Cuba. And the Cubans have said they are, quote, willing to negotiate. It would appear that Mr. Trump has forgotten the admonition that you pick one fight at a time. I'm not sure that I was going to say he, but the truth is we, Daryl, have the wherewithal to bully too many regimes simultaneously. And I would also point to your topic at the top of the question, which I think meant that it's not as though we're without challenges at home. Pick one. It could be that this whole thing is a strategy by Mr. Trump to engage in foreign adventures to distract the American voter, distract the American taxpayer from the obvious promises he made when he got elected relative to his delivery. As an example, smaller government, the Department of Government Efficiency. By any means, we have not solved anything like the debt and deficit in this country. We've not addressed government spending. We have, if anything, rearranged this government spending. It's ironic that he ran on a campaign of peace in the Middle East, but I'll leave that irony aside. The point is simply, I think, given that this is your show, primarily an economic show, that we need to get back to improving our own economy. We need to get back to addressing some of the problems in our own country. And it's very difficult for me to understand how these foreign adventures accomplish any of those goals, any other than doing harm. And I'm certain his goal is not to do harm as he sees it.
Yeah.
But I see no good coming out of this to markets. Ironically, one thing it has done is reinforced the global sense of American strength, if not any other kind of strength, military strength. It is also true that in times of geopolitical crisis, the inherent weakness in other currencies, which is to say, as bad as the US dollar is, it's the prettiest meal at the slaughterhouse, means that in this period where the debt's going up and the deficit is going up, the dollar's going up too, because it points out the relative weakness in other currencies. So it's a confusing time. It's also interesting to me how, in effect, short-sighted the market is. The market expects that cuts in interest rates may be over because the interest rate itself is going up. Ironically, the interest rate going up in anticipation of inflation is causing the gold price to go down. And I guess I find that amusing after 73 years watching markets. I would suspect that after this war is over, that the hangover from the war will be a fiscal hangover, and that we will have no choice but to add more debt and more deficit. And I don't suspect that the political solution to debt would be to allow the interest rate to rise. I think that the aftermath of this will look something like the aftermath of 2008, that we will deal with the fiscal dislocation of war by artificially stimulating the economy with artificially low interest rates and more quantitative easing. And I think that would be very good for gold. I have to say, too, Daryl, since this is a run-on answer, a stream of consciousness answer, that I view the current weakness in the gold price, and especially the current weakness in the gold stocks, as a God-given opportunity. You'll recall in our earlier discussions, I said that the gold stocks had, from my point of view, gotten ahead of themselves, and the silver stocks too, and I was looking to add positions in both without opportunity. As recently as the Prospectors and Developers Association of Canada, the PDAC, which you and I were both at, I had 90 conversations at PDAC, and I wrote no checks.
Wow.
The terms and conditions that financings are being offered on have improved for the investor and deteriorated for the issuer markedly in the last 2 weeks. And if any good has come to me personally as a consequence of the conflict in the Middle East and the repercussions in the market, it's that the risk-on assets like junior mining stocks have sold off like a boulder off a bridge. And I intend to take pretty dramatic advantage of that.
Yeah, for sure. So one thing that you've always told me in our discussions is you have to have, obviously, the capital and the courage to take advantage of these big drawdowns. And I've noticed something about myself because I reflect back on that wisdom that you've given me and the audience through our interviews. And I've noticed, like, every time I see like a big drop, I mean, we had it happen in October, we had it happen in the end of January, and even more so now. I feel this emotion come up in my body, in terms of like where it's like, it's almost like something that I have to go against, because the emotion is to like get fearful, and I have to like do the opposite of what that emotion is and apply the logic. And so is that something you had to practice for a while to kind of get?
Sure.
Yeah.
It took me 10 years to learn the game. In the decade of the 1970s, you'll recall from our earlier interviews, greatest bull market in precious metals in recorded history. And I confused the bull market with brains. I thought I was making money because I was smart. And I also didn't understand that markets worked. I didn't understand the cure for high prices was high prices, cure for low prices was low prices. But after I learned that lesson, and I learned it, as I told you, fairly dramatically in 1982, I went from being a very wealthy young man to having a net worth south of zero. Those lessons stuck with me. And the way you describe the lesson is the perfect way to describe it. As uncomfortable as you are in market declines, you need to project that lack of comfort on 2 or 3 million competing participants in the market. You need to think that the same trauma that you're experiencing is being experienced by others. And it's being experienced by others who may not be as solvent as you are. It is causing people, at the very least, not to buy, but in many circumstances, not to sell. Forcing them to sell. If you have a circumstance where it's more likely that you have sellers than you have buyers, it is more likely that you're going to be lonely on the bid, which is a very, very, very good place to be. It's wild to me that you have people lined up on the bid for a stock that's $3, and then the same stock 2 weeks later is $1.75, $1.80, and the people who just bought it for $3 want to sell it at $1.80. There's nothing changed with the company. I'm forever grateful, Daryl, if that's the case. There are some younger, harder working, smarter folks than me who consistently contribute to my economic well-being because they haven't figured out that you're supposed to buy low and sell high.
Yeah, for sure. So selling high. So I've been buying Wheaton Precious Metals for quite a while now, and recently it touched 165, somewhere around there. And I bought as well this recent sell-off overnight trading with my trading app. It hit 107, so I was able to get some shares at 107. And then morning came, and then we had to pivot on the threat, and then it's back up to 120 or 118, something like that. So I'm just curious, when you have an asset like Wheaton, in your portfolio, do you take profits on companies like that, or is that like a company where you're like, okay, this is like a super long term hold?
I haven't sold a share of Wheaton for years. I had the good fortune of being an original Wheaton River shareholder before Wheaton Silver got sold out of it. So, and that stock I sold a long time ago, before what is now Wheaton Precious came to exist. But really, for the last 7 years, it's been a one-way decision for me. It's been a buy decision. I have a fairly full allocation of Wheaton Precious, but every now and then I make some money on the speculative side of my portfolio. And when I do, and I reallocate some of that money to get it out of harm's way, I buy Wheaton anyway, despite the fact that I'm full. I regard Wheaton and Franco, and to a lesser degree, Agnico Eagle, as being absolute stalwarts in the gold business. And while I can't tell you what's going to happen to the gold price in the 3-month or 5-month or 6-month or 12-month time frame, I just have no idea. I feel very sanguine about the gold price in the 5-year time frame or the 10-year time frame for reasons that we've talked about. The consequence of that is that the most conservative way to express that fondness after buying gold itself would be to buy the very, very, very high quality precious metals producers like Wheaton. I think Daryl Thomas will thank himself for that purchase 5 years from now. I'm not sure you'll thank yourself for the purchase 5 weeks from now. I can't tell you how that's going to feel, but it kind of doesn't matter. It's really what it will do for you in terms of your strategic goal that's important.
Yeah, for sure. And so we have the junior miners and producers and such. Those have sold out significantly. So are you looking at allocating more capital there? Or
I am in the junior part of my portfolio, as a consequence of selling out some mistakes and also taking a little profits. I've got a fair amount of liquidity, and I'm looking to get that allocated. I'm looking to get it spent. Is that to say that I think this is a market bottom? I have no earthly idea. But sometimes things are cheap enough. I think it was Bernard Baruch who said that the only guy who absolutely bought a bottom and sold at the top was a liar. It didn't happen. And you make your money by taking a great big fat slug out of the middle. And I reckon that some of the companies that I was looking at that seemed like they were high quality companies but were expensive, some of those companies are off 40 or 50% now. And could they be off 60? Sure. Do I really care? No.
Mm-hmm. Okay. And then do you have that same sentiment with the silver miners?
Yeah. No, absolutely. There's just so many fewer of them. But you're seeing, you're seeing things like Pan American. Now, granted they had a production miss. But that's high quality company is really, really, really selling off. I guess the one that sold off the most dramatically of the decent quality juniors has been Aya, which I'm very fond of. Now I have a very full position in Aya. I bought a lot at a much, much, much lower price. I'm a Benoit LaSalle fanboy, but the stock's off 40%. And I suspect that all the good news that was in the market around their new mine expansion has been knocked out of the market by sentiment. It's not like the mine got up and walked away. It's still there. It's just that people's fondness for it has gone away. Again, the social media adoration that company enjoyed 40% higher relative to the disgust displayed for the same range of assets 40% lower is hugely amusing to me. One of the interesting things I've observed in the market has been one of the justifications for selling has been the increase in oil price and the fact that the increase in oil price will increase the energy input and raise the all-in sustaining capital costs in the miners. And this is true. But if people are going to pay attention to that math, they have to pay attention to the fact that the miners themselves were priced on a discounted net present value basis as though the gold price were at $3,200 or $3,300. Granted, the gold price isn't at 54 anymore, but there's still a fairly substantial gap between the Wall Street and Bay Street assumption of the gold price and the price that companies are selling gold for. I was going to say to speculators, they can't have it both ways. They absolutely can have it both ways. They can make mistakes both ways and sell the stocks to me at a discount. That would be fine with me. I get off of my educational high horse and I get back to being a speculator. So yeah, it's an interesting circumstance and one where I think speculators have to deploy. I've told you before, Daryl, I've made a lot of what I made. I mean, I made a lot of it through hard work, being reasonably smart, but I made just as much by buying hate and selling love. And 4 weeks ago, the markets were in love. That's when you sell. Right now, the market, people are reacting with disgust, hate. You're supposed to buy.
Yeah, for sure. So for those that are looking at the price of oil per barrel and how that impacts the margins for these producers, I mean, wouldn't you say that's also a reason why we invest in the royalty and streaming companies, because they don't have that operating cost?
That is also true. There is a subset of companies, as you point out, royalty and streaming companies, where you are not impacted by capital costs or operating costs. Very, very, very nice circumstance. We've talked before on your show, Daryl, about the fact that it would be entirely feasible to construct a whole natural resource portfolio, both mining and oil and gas, juniors and seniors, all from royalty and streaming companies. It's ironic because they're great businesses that in a rip-roaring bull market, that portfolio would likely underperform a less intelligently constructed portfolio. But I suspect through thick and thin, that the inherent advantages of the royalty and streaming companies would mean that a portfolio constructed both as to hydrocarbons and as to mining of royalty and streaming companies would probably, if it did underperform broader market in extractive industries, it would underperform it with much less risk.
Okay. Yeah. Yeah, definitely. Okay. So I want to pivot to copper. Copper sold off significantly. And in particular, I'm curious in your thoughts on, so I've been buying more Ivanhoe Electric. And so, I was talking to the guys at PDAC and stuff, and I was just like, I got to buy more of this stuff. Like, and so, they're scheduled to be in production, in the next year or so. And, and the copper grade that they have, is significant. I mean, it's like, amazing. So curious in your thoughts on copper and companies that are in development stage, like Ivanhoe Electric.
Well, in the very short term, copper's getting waxed. Even before the war started, there were so many people on the long side of the copper trade. Copper inventories were swelling. This war, if nothing else, probably materially slows down for some period of time the world's economy. And that's not good for copper. But this is a very short-term phenomenon. We have been underinvesting in copper for 30 years. And there's just no way in the world that we will be able to bring on enough capacity in the copper business 5 years from now, 6 years from now, 10 years from now to match demand. And the market's going to have to ration copper by price. And that price is going to be higher. It's just going to be higher. So again, Daryl, you may feel stupid 5 weeks from now. You're going to feel very smart 5 years from now. With Ivanhoe, Ivanhoe's a really interesting stock. On the one hand, the recent transaction by Hudbay of Arizona Sonora provides you with a direct comparable. I mean, a very, very similar deposit, very, very, very close. And that's extremely bullish. The Arizona Sonora side was at least so far larger than the Ivanhoe side, but they're direct comps. And what that price is telling you is that you get the whole of the rest of Ivanhoe Electric for free. Getting a decent asset package wrapped up by Robert Friedland for free traditionally has been a pretty good move, I think. Whether or not that's the finest way to play copper is a different story. But I think the point of the message is that the new information that you can bring to bear on the calculation, first of all, the stock is off by 45%, which is always good. It means, at least in the context of the last 6 months, you're not overpaying. The fact that you have a comparable, a direct comparable, what the market will pay, is useful. And the fact that you have, not in the 6 month time frame, but in the 5 year time frame, the wind in your sails is also very attractive. Now, if you get rewarded with a real good snapback in the price of this thing, remember to sell some.
Yeah, for sure. Yeah, I mean, I bought it at the Liberation Day lows of $3. I mean, it was trading down for a while. I mean, from 6 to 4 to 5. So it was trading down for a while, and then Liberation Day, I loaded the boat, and then sold it on the run up, and then now it's pulling back significantly. So I've been reallocating capital there.
Nice trade. I wish I had.
Yeah, for sure. Okay, so I want to talk about the symposium coming up. So in this particular context, you all have sold out, to my understanding. And that's
I learned yesterday that we had managed to reconfigure the conference room in a way that pleased the fire marshal. And I think we now have 32 live seats to sell out. So we do have 32 live seats remaining. The live stream portion of the conference is effectively, endless. we can sell as many live stream tickets as we want. But it turns out we do have somewhere between 30 and 40 remaining live tickets. But make no mistake, this thing will sell out. Last year, we sold 25% of the tickets we had that we sold in total in the last 3 weeks that the tickets were on sale. So there is zero doubt that the live portion of the conference will sell out.
Yes,
too, whether or not, and you're familiar with this, Daryl, whether or not people attend live or via live stream, they will have access to the recordings, which they will need. You can't get all of the information that's available in the 4 days of the conference during the 4 days of the conference. And the other thing is that whether you attend live or via live stream, our conference carries an unconditional money-back guarantee. If you think for any reason that you didn't get your money's worth, whether you attended live or live stream, no worries. Email us. We'll give you your money back.
Mm-hmm. So what does this speak to you? What does it say to you in regards to the sentiment? I mean, obviously we were at PDAC. I mean, you had 40,000 people there. We were at VRIC. We had about 9,000 people there. There's these record numbers of people coming to these conferences. And is this something that you've seen in prior bull markets, or is this?
I think that we would have expected to sell out this year. What I didn't expect was the very strong early uptake. And we've looked at the data around that. What happened was that the people who came 2 years ago and the people who came last year made enough money, I guess, that the conversion from last year's attendees to this year's ticket holders was extraordinarily strong. And the early strength that we exhibited in ticket sales were 75 or 80% renewals, which I guess I should have expected. The truth around how much of the attendance is going to be market related will really depend on live stream sales. Last year, 1,400 people from 33 countries came. We are expecting this year's live stream sales to be somewhere between 2,500 and 3,000, possibly, partly as a consequence of the market. And we'll see how that ends up.
Wow.
Certainly,
Yeah.
our product is very different than the PDAC. If you're a mining industry professional, you almost have to go to the PDAC. It's a venue that has 30,000 of your closest friends from around the world. It saves you a lot of air miles. And the VRIC is also a unique conference in the sense that it's where the junior side of Vancouver puts itself on offer every year. So it's a very, very different conference than my conference. The VRIC is probably the most market-centric of the conferences, which is to say attendance at the VRIC is, I think, more directly correlated to people's optimism and pessimism about the market. The PDAC, if you're in the mining business, you have to go. There's no second choice. Mine, if you're a professional or semi-professional real estate investor, that's the sort of franchise that I'm after. So it's probably less market-centric than VRIC, and probably more market-centric than the PDAC.
Yeah. So, I mean, the first time I was there, 2023, the sentiment was way, way down compared to the last year I went. And then, even 2024 is a little bit better. 2025 was a lot of people. And so now that you say that, almost all live seats are sold out, I'm like, oh, wow. This is going to be a lot of people. So I'm trying to prepare myself for that. But I'm glad.
2023, the market, despite the fact it was really cheap, it traded sort of sideways to 2024. 2024, the market took off. We talk about how much money we made in 2025. The people who came to the 24 conference made 50, 60% in that year. So the continuation of seats from 2024 to 2025 was pretty good. The fact that the market then took off meant that the continuation from 2025 to 2026 was really strong. And the newcomers to our conference were merely sort of icing on the cake. When you come to the conference, July 6th through 10, Daryl, you're going to see a lot of familiar faces there. You're going to see people who saw in 2024, 2025.
Mm-hmm. Yeah, for sure. Okay, so as we wrap up today, what are the hated assets you're looking at? So oil and gas was hated for a while, and it seems to be capturing a bit.
I'm going to be looking at the junior. I'm going to be looking at the junior miners.
Junior miners.
The some pretty high quality names sold off 45%. I thought they were doing good work. There's some that I wanted to have, some that I know already that I wanted to have fuller positions on in my portfolio, but I couldn't bring myself to average up, and now I don't have to. So I'm going to have a pretty busy couple of weeks, I suspect, if the market stays like this, or better yet, if it continues to decline. I'm going to have a pretty busy time for the next couple of weeks.
Yeah, definitely. Yeah, that's good to know. Okay, well, any news on Battle Bank? I think I got my email stating that my account's coming soon.
Well, we're looking for Daryl Thomas to open an account and do some business with us. We opened the bank, I guess, in January. We wanted to test the bank with our own money. You never get a second chance to make a first impression. So we wanted to make sure that checks cashed and deposits deposited and stuff before we opened it up to the world. We've now worked ourselves through sort of 3,500 of the 23,000 names on the waiting list. And so that's the process that we're in now. People who are interested in doing the bank should go get on the waiting list. We'll be through it in May. Look at the menu of goods and services that are offered. Pick some, the ones that are of most interest to you. And we're going to approach those people on the waiting list who are interested in the products and services that we have the most confidence in operationally in the near term. As I say, we only get one chance to make a good first impression. So we're going to be looking to onboard people who are interested in the products that we can fulfill the easiest the first. But we should be through at least notification to the entire wait list in May.
Okay. Yeah, that's good news. Good news. All right. Well, you all have the information and everything. So where should people send their portfolio picks? I mean, especially with the juniors, as a place you're looking, I may have to send some juniors your way.
Yeah, we're working real hard on the database right now. When stuff gets cheaper, it gets more attractive to us. So we're busy working on a database. In answer to the question, people who want their stocks evaluated by me personally can have that done for free. You go to ruleinvestmentmedia.com, list your natural resource stocks, and I personally will rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comments might have value. Normal disclaimer, no crypto, please. No pot stocks, no tech stocks, just natural resource stocks. ruleinvestmentmedia.com.
All right. Well, you all have the information. Thank you, Rick, for joining me again, and look forward to having you back.
Thank you, sir. I enjoy it, and I look forward to hosting you down in Boca. I think you're going to have a good time.
Yes, it's going to be fun as always, so I'm excited to be there. So Great. We'll talk soon.